At the beginning of this year, 2022, we published a report and we had two very non-consensus views about the way that this year would pan out. We were very negative about the GDP growth of the US and the rest of the world, and we were concerned about the impact that would have on Vietnam. And we were very positive about the consumption story in Vietnam. So basically what we were predicting is that strong domestic consumption in Vietnam would kind of offset, whatever slowdown was coming because in the rest of the world. And obviously that is the way that things played out. I am, frankly speaking, quite concerned about the world economy for the next 1-2 years. And the key message that I want to give you today is that I think that you should expect to see Vietnam to remain very resilient, like it has this year, like it did during COVID. And then, so that's the first message. And the second message is, once we get past this difficult 1-2 year period for the world, Vietnam is going to be in a very, very good position, partially because of the way the geopolitical landscape is shaping up, what Sunir had alluded to, and we'll get a bit more into the details of that. So that's the two things that I want to make sure that you get across today. So as I just mentioned, the economy has been very resilient this year. Consumption is about 2/3 of the GDP, and what we've seen is that consumption has been accelerating all year as the year has progressed. Now, part of the reason that the growth rate has gone in this parabolic shape has to do with the fact of the timing of when the COVID lockdowns were last year. So obviously Q3 was when Vietnam had its worst of the COVID lockdown. So that's part of the reason that the year-on-year comparisons look so favorable. That's not the whole story, though, because if you look at the way that this year, 2022, is playing out, growth, the consumption has been accelerating all year long. In the month of September, for example, our retail sales grew by almost 3% compared to August. So from August to September. Part of that has to do with the school reopening, et cetera, but still, the point is people have the money to spend. The reason they have the money to spend in Vietnam is because people's household balance sheets are in pretty good shape. They didn't borrow, huge amounts of money. They didn't max out their credit cards like they are in the US right now. So this is the first reason why the economy has been resilient this year. And the second reason is, well, I just mentioned that we were concerned about what was going to happen in the manufacturing sector, but actually manufacturing output in Vietnam has remained pretty resilient. Despite the fact that, we see in the rest of the world, the US really is, the growth is, if you looked at those ISM numbers that came out 2 days ago, the rest of the world, in the US in particular, the demand is really dropping off of a cliff. Well, what happened here is that there has been an acceleration in the movement of factories from China to Vietnam. And that's partially reflected in the fact that this FDI number you see here, the FDI is up almost 20% this year. So that's because more and more factories are moving here, or they're setting up in Vietnam instead of in China. And this is going to be, I'm going to loop back to this topic when I talk about, so I mentioned, the first 2 years, we're going to be 1 to 2 years will be resilient. And then once we get past whatever the world experiences in the next 1 to 2 years, Vietnam is going to be in a really good position. And that gets back to this FDI story. So these are the two reasons that the economy has been quite resilient this year. We don't have any stagflation issue in Vietnam. Part of the reason we don't have stagflation here is when you think about what caused inflation in most of the world, a lot of different elements. Obviously, the Russia-Ukraine is part of it. But the main problem is that the governments around the world borrowed a lot of money and then kind of handed out that money and, that got spent. And that's one of the main reasons that's pushed up inflation around the world. We did not do that in Vietnam. You can see here that the COVID response in Vietnam was very modest. And this year, which is absolutely incredible, we're running a budget surplus, a government surplus, you can see up here. So this is a really impressive situation, and it helps to explain why we have not had major inflation in Vietnam. Also, Vietnam is essentially food self-sufficient. We're not energy self-sufficient, but we don't have a huge energy deficit. And I can talk more about that in the Q&A if anyone's interested. But this kind of explains why the inflation rate in Vietnam is below 4%, which I showed on the last slide there. We expect GDP growth of about 8% this year. I do expect a deceleration of growth in, well, I thought there was a pointer here, but it doesn't seem to be. anyhow, you can see we're expecting the growth to fall to 6% next year. Basically, what I expect for next year is this slowdown that is really unfolding in the world economy. We do have a big exposure to, the U.S. is our biggest export market. Manufacturing is about a quarter of the economy. So as that slowdown in the global economy plays out, that's going to knock some of our growth next year for sure. There's no way around that. The reopening boom cannot go on forever because things eventually will be really fully reopened. So those two things are going to be sort of pulling down our growth. But against that, we have two positives. The first positive is that, we are going to get more and more tourists coming back next year. So tourism, foreign tourism, used to contribute about 10% of the economy. This year, it looks like we're on track to have about a quarter of the number of tourists that used to come to the country every year pre-COVID. We're probably getting about a quarter of those back this year. And I expect that number to go up to about maybe 60% next year. Keeping in mind that the Chinese tourists were always about a third of our total tourist numbers. And that has to do with when they reopen, et cetera, et cetera. But we'll get some offset from this foreign tourists coming back. And the other thing is that in recent weeks, let's call it the last 2 months, I would say, we've had a real pickup in infrastructure spending in Vietnam. It's showing up in the numbers, but it's also showing up like anecdotally. We know, the developments of certain projects going on, different policies coming into fore, et cetera. So I think the way to think about the economy next year is that the policymakers are very smart. They understand that, Vietnam's exposure to the rest of the world and that things are in the rest of the world are kind of rolling over, slowing down. And so what I think they're doing is they're ramping up infrastructure, which they need to do anyhow. They want to keep attracting FDI flows to the country in the years ahead. And I think that you'll see more concerted effort next year to ramp up infrastructure, partially to offset some of the weakness that's coming from the rest of the world. And we see that starting already. So that's kind of what we see for next year. And the things that I'm particularly worried about, obviously the biggest risk I'm worried about is this surge in the US dollar. My personal view is that we've seen the dollar peak for this year. We peaked at just under 115. This is getting a bit geeky economics things, but if you look at, there was some noise out of the White House last week where they were essentially saying there's not going to be a Plaza Accord 2.0. And some of you may know that before I had this job, I was essentially a hedge fund trader, internal hedge fund at Lehman's and JP Morgan. And we kind of got this idea that when government policymakers are coming out and saying something like that, there's not going to be a coordinated effort to stop the rise of the dollar. Normally, that's the kind of thing they say just before they make a coordinated effort to stop the rise of the dollar. So I personally don't expect much more dollar strength for the rest of this year. But if it happens, if we go over the 115 level in the DXY, that will clearly be a risk for Vietnam. And I can talk more about that in the Q&A if anyone's interested. One thing I'm not worried about, though, is what's going on with China and China's slowdown. That may sound surprising to you because it's our huge neighbor that's right to the north. And I'll come back to that in one slide. First, let me just discuss again about what's going on with the FX rate here. So Vietnam's currency has depreciated by less than 5% this year. This, frankly speaking, is an amazing achievement given everything that's going on in the rest of the world. So, the dollar is up like almost 20%. The Chinese currency is depreciated by more than 10%, et cetera, et cetera. And you see what's happened in our regional peers here. The government hiked interest rates 2 weeks ago. I don't think they did it because of inflation. I just mentioned inflation is below 4%. So it's not really a critical issue in Vietnam like it is in some other countries around the world. I think this is part of their effort to protect your interests as foreign investors. So I think that starting from around 2015, Vietnam's government has made a very savvy decision to really try to focus on keeping a stable US dollar VND exchange rate in order to protect the interest of foreign investors. Because foreign investment inflows, FDI in particular, is a really major growth driver for the country. And I think this policy harkens back to what happened in China after the Asian financial crisis. So you see a lot of times things that happen in Vietnam kind of follow the successes in China and other countries. So now Vietnam is one of the only countries in the world in which the policy interest rate is above the inflation rate. So I think, again, that they did this to protect the value of the dong, and I can get more into that topic if people are interested. And as I mentioned before, I don't think we need to worry too much about what's going on in China, whether they're going to reopen or not reopen, or what's going on with their own domestic story. The reason why is that, as you can see how I've laid out here, Vietnam, surprisingly, now not every industry, there's some industries that are different than others, but on the whole, Vietnam does not really have a lot of exposure to China's domestic economy. The right way to think about the relationship between China and Vietnam is that we essentially buy factory equipment, production materials, plastics, resins, things that we need to produce products. So we buy that from China, and then those products are assembled in the factory here, and they're sold to our real customer, which is the US and also to some extent the EU. So we need to be more concerned with what's going on in the US economy than what's going on in the Chinese economy. And this helps explain why our economy is growing still 8% this year when China's domestic economy is having so many issues. So China's kind of a non-risk. Not nothing, you know, different sectors will get affected differently, but on the overall, it's not something we need to worry about too much. Okay, so that's the story about how we've been able to remain resilient this year. And now what I want to lay out for you is the second part, because the two takeaways are, number one, we've been resilient. We're going to be resilient during this next 1-2 years period. And we come out of this next 2 years like looking really, really good. So now this is a little bit more about where the resilience will come from next year, year after, and why we're going to look really good starting from 2 years. And it really gets down to the topic that Xavier was talking about in his presentation, is there's an enormous amount of FDI that's now really flowing into, particularly into high-tech industries. And we can expect that this FDI is going to continue to flow into Vietnam, and particularly into high-tech industries, because of the geopolitical landscape, how that's all panning out. So that's what I'm going to talk about next. You probably are aware, and you've probably seen the headlines of these recent announcements that, you know, Vietnam is going to start making the Apple Watch. This will be the most complicated product that ever got made in Vietnam. Semiconductor parts in Vietnam, this is really an amazing achievement. Also, the Chinese, this is still the #1 place where Chinese want to relocate their factories to. And the majority of factories that are relocating from China to Vietnam are, as you can see here, in the electronic sector. So you have more and more FDI coming into high-tech sector, and this is very, very important because I'm going to slow down a little bit and get into, not too long, but a little bit geeky economics details, because it's quite important for what's going to happen in this country over the next 5, 6, 7 years. Basically, right now, what Vietnam does is, if this is a smile curve of where the value is added in the manufacturing, when you manufacture products. And right now, Vietnam is focused on, frankly speaking, the lowest value add part of the whole manufacturing value chain, or what they call here a value smile, okay? And so what we want to do is we want to move up into these higher value parts where we can capture more of the value of the product that's made and sold eventually into the US and into Europe. And one way that you can see that Vietnam is not capturing as much value as it hopefully will in the future is this chart on the right. This is a little bit complicated, geeky chart, but basically what this chart says is when Vietnam produces a Samsung phone, for example, that gets sold into the US, so how much of the value in the final product, so the final product goes in a box, gets on a ship, goes off to the US, how much of the value in the final product was created here in Vietnam, and how much was imported? So if you import the chips, if you import like the fancy glass that's needed in the smartphone, so you can see that right now Vietnam essentially imports a lot of the value in the final product. So we import high value components. We use the cheap labor, high skill cheap labor in the factory here to assemble the final product, which is this part here, the production. And then we send it off to the US. Here's the good news. There's a lot of evidence, academic evidence. I have some recent studies from the London School of Economics and also from Harvard here, that FDI is one of the most powerful drivers to help countries move up into producing more, capturing more of the value, producing more and more complicated products, so we can get up to these parts of the manufacturing value chain. So FDI is instrumental in helping countries to move up the value chain. That's number one. And what you can see from this recent research published by Harvard is that when a developing country improves its capability to make more and more complicated products, this is the single most powerful growth driver for a country. So this is really the basis right here for my optimism about the next 5, 6, 7 years in Vietnam, because this is exactly what's playing out here right now. Now, when I put this very optimistic picture for you, the thing that may pop into your head is like, okay, but this is all contingent on FDI continuing to flow into Vietnam and into these high-tech, industries. This is a topic that we've covered in some of our previous reports and presentations, particularly this whole issue in Korea and Japan, that they face a situation that's called secular stagnation that kind of compels them to invest outside their countries. So that's something we've often discussed and talked about. But what I'm going to talk about today is a little bit different, which is the way that the geopolitics of it all is with this Russia-China alliance and with the US and China trade war, et cetera, the way things are panning out is actually really, really favorable for Vietnam. And here I want to point out two things. First of all, the tariffs that the previous administration put on China's imports to the US, the Biden administration recently renewed those tariffs, and they essentially said, these tariffs are never going away. I mean, if you really, the statement is pretty direct here. We had some people from the State Department coincidentally happen to visit a couple weeks ago, and in our informal conversations with them, they basically said the same thing. Yeah, the tariffs on, imports from China, they're basically never going away. So Vietnam comes under the umbrella of what has become to be known as the friendshoring. So Vietnam is one of the countries in which if you don't need to worry about that you're going to have big tariffs put on your products when you set up a factory here. And one way that we know that is because there was this report that was published by the Atlantic Council. The Atlantic Council is a very influential think tank in Washington, D.C. It's not as famous as the Brookings Institute, but these are basically all the same people, same mindset. And essentially what this anonymous white paper said, which was giving advice to the incoming Biden administration, is they said, look, if you want to cope with or deal with China's rise in Asia, the right way to deal with it is to economically engage. Now, they didn't mention Vietnam by name, but it was like almost by name. You didn't really need to read between the lines very much to see that basically what they were talking about in this report, which is again when the Biden administration came into office, is the U.S. should continue and actually increase its economic engagement with Vietnam as a way to kind of counter China's rise or deal with China's rise in this region. If we think back about how the U.S., the Cold War with the Soviet Union, particularly during the 70s and the 80s, what was happening at that time was that the U.S. essentially said to Japan, Korea, to some extent Taiwan, they basically said, we want you to be on our side, and basically you can sell us as much stuff as you want, and we're never really going to give you a hard time about that. There was some small things here and there, but basically the U.S. way of countering the Soviet Union at that time was to have extreme economic engagement with Japan in particular. And this is what we see now happening in Vietnam. And it's showing up in the numbers. This chart, this table here shows you what the increase in Vietnam's trade surplus. By the way, the trade surplus with the US is already enormous. But it continues to go up. It went up last year, and you can see in the first 9 months of this year, it's still going up. And at the same time, Vietnam's trade deficit with China is getting more and more negative. To me, this is the clearest evidence. It doesn't get much clearer than this. This is factories moving from China to Vietnam. That's what this is. So this is the strategy. This is what's happening. You will companies that now that they recognize that multinationals, when they recognize that Vietnam is under this friendshoring umbrella, they will be really incentivized to put their factories here. Also because of all the things that Severe talked about with the high quality workforce and the wages are low, et cetera, et cetera. These are things we've talked about in some of our previous presentations. So this is what makes me feel very assured that this FDI story is going to continue. And then the slides that I put earlier, from London School of Economics and Harvard, this is how countries move up the value chain, and moving up the value chain is the single most important economic driver. So this is kind of a snapshot of what to expect in Vietnam over the 5, 6, 7 years. And the last thing I want to end on is a topic that we often talked about in our presentations in these webinars and these seminars before, and also in some of our reports. We don't always come back to it just because it's like it's always there. The demographics and the urbanization are always there. The reason I slipped this one here in at the end is because our CEO, Don Lam, recently gave a talk at the India-Vietnam kind of cooperation summit. And in helping to prepare some of the talking points for that, I was reminded of how important this topic about demographics and urbanization are. Vietnam and India are basically two of the only countries in the world where demographics is a plus to GDP. It's pushing up GDP growth. Most countries around the world, demographics is actually a minus, particularly in Europe and to some extent in the US. And of course, the urbanization story that is always there as well. Long story short, Vietnam has about another 10 years in which the demographics are going to help push up growth. We've just enjoyed about 20 years where we've got a demographic dividend. There's lots of different ways of looking at demographics. This is one particular way that I like, but anyhow, you can see we have about another 10 years. India probably has about another 20 plus years and is newer in this cycle. So that's the last thing I wanted to mention. And okay, at that point, I want to open it up for questions. Yeah, do we have the microphone? Yeah.
Thank you for the excellent presentation. Now, to sustain FDI growth here in Vietnam, right? I'd like to ask you a question on infrastructure here in Vietnam. We've seen issues related to climate change here in Ho Chi Minh with the flooding and all that. And then the train here, the train, the Japanese Vietnam project to build a train in Ho Chi Minh. How is that going? I was hoping to take the train on this trip, but apparently has been delayed, isn't it? This particular project. That's point number one. Point number two, how do you think...
Sorry, can you, I didn't catch the question. Could you repeat it? Sorry about that.
The metro train.
The metro.
Yeah, metro train, yeah. So point number two I want to ask you is, for Vietnam to really grow in the future, can you comment on the standard of university education in Vietnam relative to other countries, Singapore, China, India? These 2 points I'd like to
well, you really try to go right for the dagger, huh? Okay. So regarding the metro, I personally don't think, I mean, it will be great when we have it, and it will encourage more urbanization, and which is one of the growth driver I put there at the end. I don't think this is really an issue about FDI. So I think for FDI, it's the port, the access to the port needs to improve. We need a proper ring road around Ho Chi Minh City and Hanoi. Obviously the new airport. I think these are bigger issues vis-a-vis FDI. I do think that when we get the proper metro in place, if we think back like to the development of Japan in the 1970s, all the Tokyo Railway and that, and in fact, I think Tokyo is doing a big project with Bakemex out in Binjun. So that will really help the urbanization, but I don't think that's an FDI story. It's my personal opinion. And by the way, let me just close the loop on that by mentioning one thing, which is we have a report about this on our website if anyone's interested. We believe that the current level of infrastructure in Vietnam can probably sustain the current pace of FDI inflows for about another 5 years or so. So at some point, they're really going to have to get serious, and which they seem to be doing right now. But that's we still have a ways to go before that will be a binding constraint. Okay, The university one, actually, when I first came to Vietnam, I taught in the National University in the mathematics department, and it was one of the things really convinced me that I wanted to stay and work here. One of the things that made me fall in love with the country, because long story short, with my own personal background, so I have a master's in mathematics from Stanford, so it's not really a high enough, my background not really high enough that I could teach like in an Ivy League school or something like that. So when I taught in the class, and so therefore I didn't want to teach in like a state school or something in the US. So when I taught in the National University here, oh my God, the level of the student was like amazing, another level, However, there were other students that had obviously like got into the class however they got into the class. So I am concerned that the university system here needs upgrading. We, VinaCapital, have been doing our part and engaging with RMIT and trying to get into helping out with developing an innovation center to upgrade the level of quality of education here. But the high school education system is excellent. That's why we have these really good PISA scores. But I do believe that the university system, needs more work and more effort, which I hope the government will focus on with, the cooperation of people like us. Yeah. Any other question? Yeah.
I'm happy to fill a gap. How does this go wrong? I mean, you're very positive on the outlook. Where does it go wrong? How does it go wrong?
Yeah, in the short term, the dollar could cause problems. We've seen the central bank has basically sold about $12 billion of its FX reserves this year. So they started at about 110, and now they're a little bit below 100. They have FX forwards committing to sell probably about another 8 billion or so by Q1 of next year. So, and basically what I think is prompting that is that there are some companies that probably were not really supposed to borrow in dollars but did. It's not a big issue in Vietnam. What I would call our proper external debt here is about 15% of GDP. The technical number is 30%, but that includes money that's owed to the World Bank and the ADB and this kind of thing. So that's one thing that makes me quite concerned in the short term. So therefore, I'm relieved by this recent pullback in the value of the dollar. The longer term story, I think it really is the infrastructure spending that they really need to, we need to make this north-south highway. Basically, most of the factories are clustered around the greater Ho Chi Minh City area, greater Hanoi and Haiphong area. About 45% of the workforce in Vietnam is still employed in the agriculture sector. So there's a lot of workers that can still come from the farm to the factory. But if we don't have like proper roads to be able to put the factories out where, kind of closer to where the workers are, that could be a constraint. That's would be my main worry. Yeah.
Thanks for the great presentation. Could you give us some of your view for the GDP per capita in Vietnam? I remember, like 3,000 per capita is one of the tipping point for the consumption expansion.
Oh wow, yeah.
And right now, I guess the Vietnam is below 3,000, but I bit doubt about still not reaching a 3,000. But could you give us your view?
Yeah.
Or when would it be touching 3,000?
Okay, so first of all, thank you for really watching my taking notes. Okay, there's a few different GDP per capita numbers floating around, and the reason for that is because the government went through an effort, and it was kind of in the middle of when all the COVID stuff was going on, to revise up the value of Vietnam's GDP. So, and perhaps that was an effort to capture kind of the unofficial economy. They said it wasn't, but maybe that was part of what their motivation was. But anyhow, on these new revised numbers, we are actually over 3,000 now. Should be around 3,400, 3,500, something like that. Yeah. And as you pointed out, just for the benefit of the room, what we observed, and I think that was like 2 years ago I did that presentation, what we observed was that in many emerging markets, once you get past like the 3,000 level, that's some kind of a magic type level in which domestic consumption, the domestic growth story starts to feed on itself. And what we saw in China was once they got past the 3,000 level, over the next 10 years, basically property prices and incomes went up by about threefold. And so I think we're in that now. We're literally in that trajectory where you're going to see which would be a surprise for some of my Vietnamese colleagues because they feel like, wow, the property price already went up a lot. And I think that over the next 10 years, we'll see a much bigger increase than what people are expecting, anticipating.